Good morning, traders. This is Sam, the Trader Geek, with your Monday, February 17th, 2025 market review and preview for this coming week. Hope you're having a good holiday weekend. And we're looking at what happened on Friday. And I want to start out with the major markets on the day. Bitcoin kind of coming back, up 1.04%. Bonds also showing some outperformance, given that retail sales came in less than expected. Mag 7 bouncing back 0.5%. The Q's up 0.42%. On the downside, VIX losing 2%. Gold finally giving up a little bit, barely 1.5%. The Dow was down 0.33%. SPY was kind of flat on the day. Looking at the sectors for Friday, we can see telecommunications up 0.67%, and communications. First one is telecom. Second one is communications, which includes, of course, Meta, and IYT transports up 0.5%, and energy bouncing on Friday. Whereas metals and mining kind of losing ground along with gold, and the healthcare sector is down along with staples and utilities. So kind of the defensive sectors were at the bottom of the list, except for the metals and mining in conjunction with finally a pullback in gold. Industry-wise, China stocks were the star, with Alibaba soaring even further on Friday. TAN being the solar stocks up 1.63%, and XOP being the exploration production for oil stocks, 0.8%. And at the bottom, we have the GDX, gold miners, and pot stocks down 3.3%. ITA being the defense stocks on some news from the administration about reducing defense spending, and software stocks taking a little breather there, along with robotic stocks. So a little bit of pluses and minuses, but overall, it was a positive day ahead of the 3-day weekend. If we take a look at a little bit more in depth about what's happened in the week, month, and so on, you can see that the NASDAQ was up almost 3%, and S&P up 1.5%. Mid caps, if you were smaller, you didn't do so well, down about 0.25%. Russell kind of flat, and Dow Jones kind of right there, 0.6%. For the month of February, we can see NASDAQ leading the way with the mid caps and the Russells. Still, the smaller the cap, the worse they've done. And quarter to date, they're all in the green, with micro caps just barely. And of course, quarter and year to date are the same. And then you can see here 6 months, 12 months, and 18 months. And of course, NASDAQ leading the way clearly, with the SPY up 40% over the past 18 months, and Dow Jones up 29%. So once you get past the S&P 500, all done well, but not as good as the tech and the S&P 500. The same picture arises when you look at size versus value on the week. Large cap growth still the winner, and you can see on an 18-month basis, the 18-month is up 53.87%. Large cap value on the week was also big. So the bigger the stock, the better they've done. And mid cap growth and small cap growth kind of bottom of the barrel for the week. And then on a monthly basis, we can see large cap growth and large cap value doing well. And so the bigger they are, the better they have performed. Doesn't matter how far out you go, at least up until 18 months. Large cap is done better than all the others, except for I guess all of them. And the next one comes mid cap growth after you look at large cap value. So I guess mid cap growth did better than large cap value, but you get the picture. Taking a look at industry groups, let me shrink this down here a bit. There we go. Last week with DKNG reporting, DraftKings we had a lot of, and Wynn Resource reporting. Gambling stocks were the leaders, along with consumer electronics, luxury goods, and infrastructure operations. And at the bottom for the week, we had engineering, construction, uranium, and pharmaceutical retailers. So kind of a mixed bag, but a lot more green than we are seeing for red as far as industry groups on the week. Looking at the sectors, again, year to date and for the quarter, month, and week, technology leading the way with communications led by Meta. And we also have financials and healthcare kind of lagging last week. On a monthly basis, consumer discretionary showing the worst red, and that's helped a little bit by Tesla and Amazon kind of pulling back the last week or so. On a quarterly basis, you can see that communications, because of the 20-day winning streak for Meta, is up the most on a year-to-date basis. So quarter and year-to-date obviously are the same so far, since we are in the first quarter. And materials in third place, with energy still holding up 5%. And so the weakest has been consumer discretionary because of Tesla and Amazon pullback after earnings. Looking at global markets, we can see that the US is kind of not even in the middle. It's a little bit towards the bottom. And you can see that China markets have really done well this week. Netherlands, Germany, Hong Kong. So Europe has been strong, and you can also see that reflected in the monthly numbers and the quarterlies, I guess, so to speak. So United States no longer leading the world, but that's okay. I mean, and that's to be expected after 2 years of really leapfrogging everywhere else. India and Turkey looking like the only two that are down on the year, with Vietnam kind of flat, and then Argentina up 3%. But China is the leader, along with Germany doing well. So maybe the baton transfers to the rest of the world for 2025. We don't know. It's still very early in the process. We shall see. Taking a look at commodities, agriculture leading the way last week as far as major commodities go, with industrial metals losing a little bit of ground. And year to date, precious metals led by all-time highs in gold, up 9.24%. For the week, natural gas showing its strength, and a little sweetness from sugar. Wheat finally showing some strength again. And lithium also showing some strength, agriculture there. You can see uranium lost about 4% last week, with gasoline, soybeans, and base metals. So overall, it's interesting to see that all these commodities are positive on the year. Could that be inflation? Could be. And crude oil kind of flat on the year. Feels a little bit worse than it is, but I guess flat is flat. And base metals up 1.96%. So nothing in red except for a few on a monthly basis. Taking a look at the Mag 7, let me shrink that down a little bit. And here we go. Apple, Nvidia, and Meta positive on the week, and Apple coming back with a vengeance, so to speak. And then Tesla down 1.6%, and losing the most ground year to date after really outperformance in the fourth quarter. So a little bit of a pullback and reversion to the mean, if you will. Same with Microsoft, been showing some degree of weakness here. And I keep reading about the Mag 2, the Mag 3, the Mag 1. But these stocks go up and down. That's what stocks do. And the best stocks do have periods of time where they're weak. And Amazon, after earnings, has kind of pulled back, but no big deal. But Meta is clear winner here, up 26% year to date, up 20 days in a row. Who doesn't know that story? And Nvidia is up 3.4%. It was counted out, but Apple still, despite the strength over the past couple of weeks, is down 2.32%. We'll come back to this in a second. What I like to do on the weekend video is to talk about the major charts. And we start out with the SPX, and I start with the monthly chart. And we can see here really nothing wrong with this chart, still uptrending. MACD solidly positive, still overbought on a monthly basis. You look at this chart and you can find nothing to short about this market. Moving over to the right, we see the weekly chart. And after we took about a 3-week dip, we're back in action, and we're looking to make a new all-time high on the SPX. And so we came very close last week, but not quite there. But there's 61.28 is the number, and based on what the futures are looking like, up 14 points. We'll get there on the open tomorrow if that holds up for Tuesday's market open. So MACD trying to flip back positive on the weekly, not quite there. And if we switch over here to a daily chart, we can see here that the MACD has been choppy with the market, but kind of flipping up. RSI is at about a 59. And we can see here that we closed right at the options implied expected move here. This red line here, and then this green line down here is the lower edge of the expected move. So we couldn't have been closer in terms of closing on that expected move. And we had an expected move last week of about 93 points. And as we'll see in a minute, this week's expected move is going to be about 70 plus or minus 72 points on a holiday shortened week, and also a week which is options expiration, monthly options expiration on Friday. So it would seem to be a small number of points. So looking good after a little bit of a pullback and heading for all-time highs. Take a look at the NASDAQ. Start out with the monthly again, and you'll see that looks like we made a new all-time high in February, and we did. Nothing wrong with this chart. Look at that uptrend. That topping tail in December didn't seem to matter. And whenever you see a topping tail like that, you need to see follow through. And here it looked like we were heading down, but it was not to be. MACD solidly positive, solidly overbought on RSI. Looking at the weekly chart, we can see that, again, just like the SPY, somebody would call this a dipsy doodle, came right down and right back to new all-time highs, and the MACD is trying to flip positive. And we take a look at the daily chart, we can see that we're right at the upper Bollinger Band there, and nice 3-day candles for the week, kind of re-establishing the uptrend in the NASDAQ and the tech stock. So it's looking good. And it looks like NASDAQ has about an expected move of about 308 points this week for a holiday shortened week, with which is light on economic data, as we'll see. One more to look at, and that's the RUT. Switch back to the monthly, and you can see here, not as attractive as the monthly charts on the SPX and the NDX. We have a MACD that is not quite straight up, looking like it might want to curl over, but far away from doing so, way above the zero line. Nowhere near as overbought. We're at the mid-level, about 57 for RSI. And we have not seen much strength from the small caps. And as we saw as a result, year to date, the smaller the capitalization, the worse they've done. Looking at the weekly, we've got nothing but chop here. I mean, here we are at 2279 for the Russell or the small caps. And we've been there since July. I mean, that's where we were back in July. So we've gone nowhere in 7-8 months. And that has to change. We need to see a trend change, and we need to see that trend change starting on the daily chart. And again, now that we've come in for our landing here and turning up, Friday just could not even hold the rally that we had. It's trying to get above the 50-day. This blue line here is the 50-day, and couldn't hold it and came back in. And for this coming week, the Russell has about a 35-point expected move, plus or minus. MACD is right at the 0 line, mid lane. You can see the chop in a compressed MACD here. Fast line is still below the midline. And if we look at, well, we did look at the weekly, you can see the MACD is solidly negative. Taking a look here, we can see here Friday's expiration for options. And then on Friday afternoon, we're already down to a 66-point move. And that's because the futures have already moved. The original move as of Friday is 72 points. One other thing I like to look at is not the Fox, we want the VIX. The VIX, and we look out, we were at 15.37 is where we closed on Friday. And that was a positive close despite a market that was up. So that's a little bit of a caution sign, but not worrisome, so to speak. That happens ahead of holidays where some want to hedge. But again, here's the daily chart of the VIX from the upper left to the lower right. MACD is negative. And I don't think we're going to get much below, this level here, 13 or 14. I think we're going to have some volatility continue and some elevated volatility on a weekly basis. It's just a big chop fest. It's not doing anything. We have pops to the upside and then right back to the downside. MACD on a weekly is negative, as it is on the daily. So VIX is not showing worrisome signs, but as you know, what I like to do on the weekend videos is talk about where we are and what do the options imply. And we have a VIX options expiration on actually, as it's on Wednesday morning, so we have one more trading day, but that doesn't matter anymore. It's off the books. But at 1537, let's call it 1550. If we go out to 1650, then we're looking at about $1.79 for the call, the $1 out of the money call options. If we look at the 14.5, which is $1 out of the money for the puts, and those are pricing at about 19. So there's about a 9 times difference between the calls and the puts, and that tells us that there is hedging going on out there one way or another. 9 times is not a worrisome, but it is a significant difference in the pricing of puts and calls. It means that they are hedging and that the emphasis is on protection. So we could see a pullback sometime this week, as would be indicated by a 9 times ratio of VIX calls to VIX puts. Looking at the calendar for this week, we have a light calendar for the rest of the week, given that we have a shortened week. Empire Manufacturing and Housing Market Index tomorrow. And then on Wednesday, we have the FOMC minutes at 2 o'clock Eastern time. That's kind of can create some volatility. Thursday, always the initial jobless claims and Philly Fed. But on Friday, we have existing home sales and University of Michigan sentiment. And we also have PMI manufacturing and services data coming out this week. So somewhat light, but somewhat market moving data points coming up in the coming week. One other thing, of course, is earnings. We're still not done with the fourth quarter earnings. We do have quite a few well-known names reporting this week. It says after the close on Monday, but there is no close. But the only one really most people know is Transocean and Huntsman. But tomorrow before the open, we'll get results from Baidu and Medtronic. Those are two of the more well-known ones. Fluor as well. Expeditors, basically in the transport business, and then ConAgra Foods. But in the afternoon, we get Occidental Petroleum and Devon Energy. Devon Energy is how they say that, along with Toll Brothers coming in the afternoon. Um, on Wednesday, I have Etsy, Tech Resources, Analog Devices, and then after the close, we have earnings from Carvana, Toast, and Cheesecake Factory. But important ones Thursday are Alibaba Group and Walmart. Walmart can be a bit market moving. And Wayfair, another retailer, along with Shake Shack, one of my favorite places. 5-9 in the afternoon, Newmont Mining and Square, or formerly known as Block, or now XYZ, whatever you want to call them. Keep changing the name. It's still the same company. Rivian and Mercado Libre on the close on Thursday after the close. Nothing really spectacular on Friday, so we should start winding down from this week on in terms of fourth quarter 2024 earnings. So that's about it for this week. There's lots of reasons to be optimistic. We saw on the charts that the monthly and the weekly charts look solid. We made a new all-time high. We didn't quite close up there last week in the SPY, SPX. But there's, despite all the cross currents, despite all the talk about inflation and wars going on, this market just is like a beach ball trying to be held underwater. You just can't keep it down. But there's a lot of things going on here. But the benefit of the doubt goes to the bulls. And if you're shorting in this market, you're probably kicking yourself because it's just not working, and the market just seems to want to go up. We do have negative seasonality for the second half of February, but then again, we had positive seasonality for the first half, and that didn't work out great. We had one up week, one down week, so seasonality isn't working out as great as it can. All I can say is price action is the only thing that pays, and watch the price action, and going in with a bias will hurt you. If you're a buyer or seller of stock options, you want to be a buyer of short-term options, not a seller. Given a 72-point move into the end of the week, you're probably going to lose if you try to sell short-term options, because we have been closing outside the expected move for several weeks this year so far. Hope you found this video helpful. If you like what I have to say, give me a follow on Twitter at TraderGeek, and I will see you sometime either on Twitter or in the forum during the coming week. Take care and have a good trading week.